Good morning. Well, new numbers are out. And it's quite interesting because we're dealing with a whole new animal. Some things have gotten a little better, some things have gotten a little worse, some things have gotten a whole lot worse, but we're going to roll through it pretty quickly. First off, let me state that I'm going to be going through some numbers here. I'm going to be covering the unemployment numbers. Still going to go over those because they're important and it's a good time to keep it in perspective. Going to be going over the housing numbers on the national scale and some of the things going on there, some of the economists' expectations, and I'll also be covering local area numbers, but I'm going to do it from a Los Angeles County perspective. So what does that mean? It means if you have a particular neighborhood or area that you want to get some numbers for and you want to see my perspective, I'm happy to do a personal video for you. Just go to my webpage, click the link below, and that's DennisMaynard.com, and I'm happy to put that together for you. Just shoot me an email, tell me the area, what do you want to know, and I'll throw it together and send you an email with a nice little video. A little less polished, probably. Okay, let's dig into the numbers. When is the economy going to recover? Well, that's a great question. Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo. We've been hit pretty hard here in Q1, Q1, abbreviations here. Q2's not looking too bright either, and it's going to be a pretty slow trough through it. And there's still states that are not opened up yet, including Los Angeles is now locked down until August at a minimum. So what are the problems and the challenges that we have to tackle here? Well, we have three different types of estimations in trying to judge when we're going to get out of this. One of the first part of this is obviously the business science. We look at the past and how the economy has rebounded in the past, and everyone still seems to be of the mind that when it comes to the economy, it will be a V-shaped recovery, meaning that we will hit a trough pretty sharp and get out of it pretty quick. So as far as the shape of the recovery, we're not talking about the stock market. Do not take recovery to be the stock market. They are not the same thing. Now, the other part of it is health science. When will COVID-19 be under control? Will there be another flare-up of the virus this fall? All great questions. We'll see how it goes. The last part of this that we really need to take into consideration is the people science. After businesses are fully operational, how long is it going to take American customers to get back to the normal consumption patterns, i.e. Movies, attending sporting events, flying, going to restaurants and bars. All of these things are factors currently, and we have to take them into consideration. I'm going to get into that a little bit here more in depth because it is relevant to what we're experiencing here in Los Angeles as well. Insofar as the type of recovery that nobody wants to see is the L-shaped recovery. This means that the economy takes a tank and just does not come back. It just stays on the bottom and troughs. This is very similar to what happened to Japan a number of years ago. I believe it was the late 90s and the early 90s. This is just what sent them into a flat line. We are hoping we don't see this. I don't think we will. I think that there is enough strength in the economy to come back and do quite well. That said, although there is uncertainty of the crisis, means for forecasts of an economic activity are more unclear than usual. We expect that most of the economic damage from the virus will be contained to the first half of the year. Going forward, we should see a recovery starting in the second half of 2020. That's the chief economist from Freddie Mac. So they're planning on a recovery. Let's see what else we have here. Evidence is mounting that home buyers may be coming back to the market after demand plummeted in the past month due to the coronavirus. That's CNBC. Now, I'm going to take issue with that statement because real estate is hyper-local, and we're going to get into Los Angeles here in a minute. And I think that once I kind of lay out some of the numbers for Los Angeles, I think that you'll have a better sense of the county as a whole, what's happening. Neither good nor bad. It's just, it is what it is. But we'll get into that. No doom and gloom right now. Don't see it. The impact of COVID-19 really impacted the number of real estate showings across North America. This is kind of a metric from a application that is used by realtors and some of the other associations called Showing Time. What it does is it basically shows the number of scheduled showings. We absolutely took a dip in March and into April, and then we've been climbing out of it. Part of that is because I believe that the rest of the country has been pretty active while we have been modestly active. We've slowed down just a little bit on the number of showings and buyers out there. You can either see that as a weakness or you can see it as an opportunity. That's up to you and your own personal preference. I see it as an opportunity. U.S. home ownerships. This is really here to show the strength of the market. Now, this is important because what we want to demonstrate is that while we had a peak in home ownership in 2005, 2006, and then obviously the crash happened and did an entire pullback on that, what we're seeing is that home ownership rates are on the rise. I expect this trend to continue, but I expect it to be a very smart trend going forward. And I will delve into that a little bit here in just one second in one of the other slides, because there's things that are positive that have happened since the crash that is allowing people to be more frugal and more thoughtful about how they're owning a home. When we talk about, this is one of the positive things, and I've mentioned this before in the previous market update, the percentage, these are all new numbers, brand new numbers out. The percentage of homeowner equity in 2020. Now, this is important because what this says and it demonstrates is, for those who are looking for the sky to fall on real estate, it's not there. We really have to get back to supply and demand in order to see pullback in pricing. So the percentage, this is nationwide, by the way, the percentage nationwide of people who own 100% of their homes is 42%. 42%. That's huge. Top that off with another 16% that owns 60% or more in equity in their home. That means their loans are less than 40% of the value of the home. That's huge. So for those of you who are looking for the massive foreclosure wave, it's not here. And I think that was a lesson learned from the last crash, that people are not using their homes like a credit card, and that's important. So we're closed. What about all those job losses? What is this going to mean? Well, let's talk about that. 3.2 million this past week. That is a lot of, filing for unemployment. That's a bad number. But it's still better than 6.9 million or 6.6 million. So if we look at the numbers overall, the trend is downward. We are seeing a downward trend in the unemployment numbers. That means that we may be starting to grind to the bottom of the unemployment figures. Now it becomes the process of getting out of it. But let's talk about the job losses and who is primarily a part of it. From this slide, this is updated, new as of May 8th, 2020. This is the unemployment report. It's covering the national averages of the number of unemployed. If you look at this, 37.6% falls on servers, bartenders, and hospitality. That's basically the restaurant business. All of it. Not all of it, well, a lot of it. Still, that's a huge amount. When you and then the next biggest numbers are retail and temporary services. Retail's getting ready to open up, ever so slightly. It's already opening up in other parts of the country. I think we'll see these numbers start to decline. Restaurants, some restaurants and bars across the country are opening up. We will start to see these numbers decline. But I think the takeaway here is that the food and beverage industry is the hardest hit, the hospitality industry is the hardest hit, and probably will be one of the slowest to come back. But I would anticipate probably by July 4th, we would see at least a 30 to 40% reduction on that unemployment number, meaning that 30 to 40% of those workers have made it back to work. I do think that we'll see that from the national standard, not talking about local, but national. I think it's important to remember that just because we're at 14.7 unemployment, there's 85.3% that's still employed. So that's still really, really good. But the unemployment rates are breaking down by adult men, adult women, and teenagers. Teenagers have taken the biggest hit of this. They are accounting for 31.9% of teenagers in that category are currently unemployed. That said, more depth, less length. I mean, this is the projections from Goldman and JP Morgan. This is where you see the V-shaped recovery. It's bouncing down and then we're going to bounce out. This is economics. We're not talking about the stock market. The stock market is a different animal. Housing supply remains at historically low levels. Supply is at low levels. Remember how California's supply is at low levels. I'll get into this here in a minute for Los Angeles County. So house price growth is likely to slow, but it's not likely to go negative. Well, that is for the nation. For Los Angeles, another story. We're a different market, different climate. We'll see. I can't predict the future, but I can give you the numbers. So as far as seller traffic, in February 2020, California already had weak seller traffic. You can see that up here on this portion of right here. As far as buyer traffic was heavy, but now has pulled back into a more stable position. Moving forward. So here's the update on the market. Let's start with the sales, and I'll be brief here just to kind of not belabor any points. Overall, in the country, we've seen days on market creep up a little bit, but the average across the United States is 29 days. In Los Angeles, that number has actually gone down. We are below that, and I'll show that slide in just one second. Here we go, average days on market. Right now, Los Angeles is at average days on market of 28 days. That means that a property is going on and it's closing escrow within 28 days. Is that extremely fast? Yes, it is extremely fast. What it tells me, though, is that people are jumping in and the great properties at great prices are going for pretty quick. And we're going to talk about all of the rest here in a second. So pay attention to the red line here down at the bottom. You can see the number of active listings has kind of went down before the end of, before the new year, and then just flatlined. And it's kind of stayed that way for a while. I believe these numbers are current up through April. As we look at the pending sales have dropped dramatically. This is true pretty much across the U.S., but in Los Angeles, we have hit a 5-year low on the number of pending sales. The number of closed sales, though, is still staying pretty consistent. We're still at the low of in the low area of a 5-year number. We'll watch May and see what happens and see if that number goes even lower. Hard to say at this moment. But the percentage of distressed property sales, this is the nation again, is still extremely low. So again, I don't think we're going to see a bunch of distressed sales for residential property at this time. So home prices, where are they sitting? Great question. The median home price in Los Angeles County is roughly around $650,000. That is everything, guys. That is condos, townhomes, single family. That is not just single family. So bear in mind that this number is, very broad scope number, if you will. Each different type of property is going to have a different number associated with it. And if you want those numbers, I'm happy to generate something, a personal property report or a neighborhood report for you if you like. As far as the median price per square foot, this is kind of like a metric that we use just to kind of check and gauge and see how whether we're advancing or declining. Median sales can be a little tricky, but median price per square foot, just under $450 per square foot. Again, this is everything. It's not luxury only. Luxury obviously is significantly higher, well above $1,000 a foot. So just to give you an idea. Inventory and month supply. This is It's really important because right now last time I gave you the numbers, we were at 2.2 months supply. This month we're at 2.5 months supply. I see this number increasing, and the reason why I see this increasing is just in the last 30 days, I ran some quick statistics just in LA County and off of one MLS, because there's multiple MLSs in LA. There were over 1,500 properties that either withdrew, canceled their agreement, or could not sell. 1,500. And the general consensus is that everyone is going to wait until we open back up again, and they're going to come on the market then. Okay, so you want to be at the bottom of the dog pile? Sellers, you need to think about this. If you really want to sell your home, you can sell your home without having a bunch of people coming through it. Call me, we'll talk about it. But I anticipate the month supply is going to start to creep up. Now, what is a normal market of month supply? 6 months. 6 months supply is a normal market. Los Angeles, because of the way it's designed and built, you would think that you're in a buyer's market when you're closer to 4 to 5 months. So it's a little different of a game. It's my kind of assessment of it, just because as the numbers creep up towards 4 and 5%, it starts to feel like a buyer's market, and people start to reduce their property prices and get sellers back in, and then it adjusts again. So supply and demand at work. That said, that is the end of the slideshow. If you have any questions, if you would like a local area or a neighborhood report, or you want me to take a look at your property and just give you a quick valuation and assessment, I'm happy to do that. Again, go to DennisMaynard.com, hit the contact button, and then you can find me. Or shoot me an email if you already have it, and I'll send you a report. Hope that this was helpful. Look forward to catching up with you in the next month. Take care.